Well, over the last week or so, global indices have been more in the green than in the red. However, Tuesday looked very different in global markets. Pretty much all global indices were in the red. Starting off with how the US looked, all US indices snapped their pretty long winning streak to end only marginally in the red though. So US producer price index for the month of October came out pretty much meeting estimates, around 0.6% rise there. However, wholesale prices jumped 8.6% when you look at them on a year ago period, and that may be a concern. And that's the fastest it has grown in the last 11 years. And the Dow was down around a third of a percent in trade. The S&P 500 was also down over a third of a percent. Now that S&P 500 has broken an 8 consecutive day of gains. Of course, it had closed above the 4,700 levels yesterday, which is on Monday. However, that has now been broken, and the Nasdaq was the real loser, down 3/5 of a percent, 0.6% down, with Tesla falling 12% in trade yesterday. Mind you, the stock has fallen over 16% in trade this week after Elon Musk's tweet, of course. Moving on to Europe. European markets too took a cue from US markets closing in the red. However, the DAX and the CAC 40 were very close to the flat line, down only around 5 basis points in trade, while the FTSE 100 closed a good third of a percent lower, and the stock 600 too was down around a fifth of a percent in trade. Moving on to how Asia is looking early in trade today. The Nikkei is down around a third of a percent. The Shanghai is down around 1.3%. The Hang Seng is down around a percent or so. And the ASX 200, which was in the green in early trade today, has now reversed that and is down around 8 basis points or so. The Kospi 2 is down around a percent, and the SGX Nifty futures was down around 0.6% early in trade today. So reversals happening in Asia with regard to the ASX 200. However, pretty much all the other indices down. Of course, this has largely been driven by China's consumer inflation numbers, which have been a concern, especially given supply constraints at factory gate prices have surged due to that. China's official consumer price index rose around 1.5% for the month of October from the year ago period, and 0.7% which was up around 0.7% in September. The producer price index though rose 13.5% in October from a year ago period, and that beats the previous record of 10.7% in the month of September. So clearly an uptrend that we are seeing there in terms of inflation in China, and maybe that's the concern that's driving Asian markets lower. Moving on to how commodities are looking. The London Metal Index fell around 3/4 of a percent, with aluminium down around 2%, and iron ore, which really took a beating, down over 6.5% in trade. Oil demand saw a boost due to US opening up its borders. A huge anticipated demand here. Oil hits around $84 a barrel as we speak, and gold is holding steady ahead of US inflation data, of course, which is set to come in later today. Gold is at around US dollars 1830 an ounce. Moving on to how the dollar index looked, it was pretty much lower, a tenth of a percent in trade yesterday. However, today it's pretty much at the flat line. The US 10-year treasury yields have eased around 2 basis points lower. However, that is largely due to producer inflation data, which has come in line with estimates. So awaiting the consumer inflation data from the US later today. Bitcoin, which has risen well this week, was pretty much flat since yesterday, is at the US dollar 67,000 mark. That's a roundup for all the global markets from our side for today.